Okay, I am live. Let's see. Okay. Okay. Okay, I am live. Okay. That's that. Pop. Should I put the up here? Okay, 1 second. Alright, guys. How's everybody doing today? I think I have a couple people in. Okay. Let's go, let's go. How's everyone doing today? So, just got done watching Moran's, obviously. Pretty cool, pretty cool. We're gonna talk a couple. I'm gonna talk about Gamestop, obviously, but also the market as well. I feel like today was kind of doozy. Of course, the CPI came in yesterday. It's hotter than it was expected, and the market just take a dump, right? So, but before that though, hold on, let me see if I could find, I forgot to put the SPY up here. Since I'm talking about the SPY, it should be up here. Yep, it hit $5,000 right here, for this particular one anyway. If I want to see the super chart right here. So all-time high was a couple days ago, but it seems like it's creeping back up again, right? Perhaps it's government spending. I don't know. The Fed is probably up to their old trick again. But as far as like if you were to look at the RSI right here, of course there's a negative diversion right there, right? So you see the price goes up, but the RSI here coming and down. So that's a pretty good indication that the momentum is kind of running lower, right, or weaker, so to speak. But again, don't take any trade from this at all. I'm just an amateur here. I'm just learning how the market goes here. But you know, the underlying fear is that the inflation is gonna keep going higher, and the rate is they're gonna be forced to hike the rate, so to speak, right? But if you look at the bond market, let's see, that's another thing too. I forgot to take a look at it. Bond market, right there. I want a Bloomberg one. It's probably a better look at it. All right, Helena, thank you for joining. But anyway, so I was looking at the bond market right here. So last couple, maybe, about a week ago, you saw that the 10 yield was like under 3. Now it's back up to 4 again. So that means, there's a growing fear that rate is going to have to go higher because of the debt and the uncertainty of the bond market, right? And so the value has to come down, therefore the yield has to come up as well, because more and more people are saying, hey, the US might, like, I don't want to take the risk of taking the US bond. I need a higher percentage in order to, be a little bit more secure at doing that. And so if you look at the coupon rates right here, it's lower than the actual market here. I'm not quite sure what that is indicative of. There's no incentive. This is how I read it, right? There's no incentive for people to get it at the discount rate. The Fed is not giving you the incentive to get into bonds, right? So that's how I read it in that sense. I hope that makes sense. If it doesn't, well, sorry, my bad. Okay, so what am I expecting? I don't know. Again, I've been saying, like, hey, there might be a correction coming pretty soon. So how low or how high can it go? We don't know, right? And so I was watching like a video about that and try to kind of understand it myself here. Not much there, but it's just, this gentleman is very good at kind of explaining what's going on. Like there might be a 50% crash right here. I'm not gonna play the whole thing, obviously. I'm just gonna let you guys kind of like discover that video for yourself. It's the most recent one. If you search his YouTube channel right here, George Gammon, I've shown his video before. He's very good at explaining how it might play out, right? And so I could summarize a little bit here in this video, but later on. Let me give the price update for GameStop real quick though. How's everybody? Hi Sean, thank you for joining. Hold on. Still, I don't know. Like, I have no idea. I feel like he's a time travel, like you said. I can't find his birthday. It's like, where the heck can I find the birthday? But I think, maybe he was adopted. Is it possible? I don't know. Or he's just a mysterious person and he doesn't want to put his, info out there. So I'm still looking for that. So today's price action was pretty interesting, right? Nothing to see, nothing to hear. Obviously, the volume is non-existent. 2.5 million shares being traded back and forth, right? Zero volume. That's like nothing. But yeah, we'll kind of like fluctuate up and down, right? And so we all know what's going to happen. I'm not saying it's going to go to the moon, even though we're post a very good earnings. We're expecting a good earnings, obviously. And of course, according to this one website anyway, they are estimating that we're going to do 27 cents. Now, I know Marantz give a different number than that. I don't know. I mean, maybe different website kind of predict different things. That's what I'm kind of, I think he used NASDAQ or something when Marantz was looking at it. Hold on, let me see if I could find that in the NASDAQ website. Sometimes like different sources, they report different things, so that's why the discrepancy. I heard him said 11 cents, but I think that's the annual estimate. But as far as this quarter alone, I think it's 27 cents on the estimate. Hold on, let me see market activity. I want to see if I could find GameStop here. That'd be like interesting though. Real-time pre-market earnings after hours. Okay. So this is the NASDAQ news, press release, headlines. 3 meme stocks. Okay, so this three days ago, February. 3 meme stock to buy on the dip. Okay, what is this? Okay, of course, AMC, right? The first one. Which one? Oh, okay, Virgin Galactic. Okay. What else? Oh, GameStop is at the third one to buy on the dip. All right, at least they mention us in a minute. But AMC, we all know what that is. Virgin Galactic, I wouldn't want to touch that. But of course, like I'm happy that they're mentioned GameStop on that list. So that was from NASDAQ. But I want to see dividend, SEC filing, chart. Yeah, I don't know which one. Summary maybe. One-year target is $10. Okay. So this is what they think that it is. Industry, electronic distribution, consumer discretionary on the sector there. Okay, market cap, we know. Share volume, 2.5 million shares being traded on average. 7.6 million shares being traded on average. Previous close $14.17. 52-week high is 27, and then the low is 1182. Okay. Earnings per share right now is at -3 cents. Okay. It's actually lower than this, right? Because, wait, no, is it lower? Yeah, it's a lot lower. Should be like 0. Earnings per share. Okay, hold on. So ex-dividend state, dividend paid. Okay, so I don't see any other ones. Anyway. Real time after. Yeah, I don't know where the estimate for what Marantz was using, so I'm sure the reason why they're different is because they're different. It's kind of like concerning too, is that they only have like Wetbush. See, price target high $6, average $6, low $6. Really? Come on, like it's the most popular stock ever, but they don't want to cover it, right? Of course not. And we all know why. They don't even want to mention anything good about this company because again, these people are bought, right? Underperform, really. Okay. Well, I'll just let you guys explore that. So I went to NASDAQ and then just look at GameStop from there. Okay, S&P, I've We'll cover that a little bit. So we still have a month, a little bit over a month until the earnings report. And so I don't know, but for now I'm gonna go with this number right here. And again, I'm using TradingView for that. So earnings, you see right here, this is an estimation quarterly basis, right? But if I were to switch to annual, right there, that's when I see that 11 cents for the estimate when Lorenz was talking about it. So I saw this one, of course, reported shares. Let me see. So again, like I don't know what he was using. Let me see. So this one, the blue is reported. The gray is estimate. So, and this is 2021, 2022. So 2022 fourth quarter, this is when we starting to beat the expectation. So we reported higher than the expectation. Remember, expectation is the gray one, right? And so we beat that. We beat this one as well. We beat this one as well. We beat this one as well. And then hopefully we're going to beat this one again. So 4 quarters in a row, we have been beating expectation, right? With this one is a little bit lower than, it's just 1 cent beat, but still beat nonetheless, right? Well, again, expectation is there. So as far as this quarter, though, the number that I'm seeing right here is 27 a share on estimate. Let's see. So if you were to look at this one right here, let me see. With this one, it says surprise 2%. Surprised. I think this is more like, right here. So this one is when we're starting to beat expectation right here. Surprise. So that's a good thing on earnings per share right there. Earnings per share, we've been beating expectation 4 different quarters in a row. Alright, hi Manuel. Thank you. Sean, how do you feel about DRS? Moran's talk about it. No price action because the shares are removed from the DTCC. I would rather have the share in my name as their corrupt way has no end. Sean, I don't know. Again, like I'm not very knowledgeable about all of the, DRS and all that stuff. And I know like people are very kind of passionate about all of that. But I think there is a I hate to say, perhaps there is a trap there. That's the reason why they want you to kind of DRS. Because of this, like they could do this to the stock, the price, right, action. And yes, it will be in your name, but I think because the DTCC has their way of change, I think they just recently changed the wording of how instead of owned by, it's held by something, right? If you, I know Sean, you kind of, I feel like you're more well versed than me, but I was watching an interview, I think Peruvian Bull. I might say his name wrong, his channel, but he had a Twitter account. Here, let me try to find it for you. And I'm gonna just refer you guys to that particular one. I'm sure if you follow Gamestop very closely, you probably know what I'm talking about. He was bringing some guy on to talk about DRS. Peruvian Bull or something. And he's usually talking about the dollar system and all that stuff too. I don't have him. That is so weird. Let's see. But yeah, I mean, my concern is that, you know, they use that to kind of bring the price down, because they have a chunk of shares in there to do whatever they wish with it, you know. And again, like, I feel like the DTCC is the culprit of that shenanigans that happens, in my opinion anyway. I'm sure the corruption happens everywhere, and they're aware of what's going on with GameStop. They just don't want to talk about it and bring too much of attention to it, because they want it to be, it's just a small little company, it was just a blip in time and all that stuff, and, you know, just trying to like sweep it under the rug, or to try to push it off as far as they can, you know, as long as they can, in order to figure out what to do with the, you know, amount of shares being sold. I think as long as we, you know, kind of talk about it. And where the heck is that? That is so weird. How am I not able to? I'll bring it back up, like, if I see it, because I'm not planning on showing you that. But I'm sure you know what I'm talking about. Like, if you search DRS GME on YouTube, I bet it's probably come up. DRS GME. Found it. So this one, there's a two-part to it. So this is the genesis of what happened, and in this interview, which is two parts to it, about 2 hours for both parts. And it explains a lot. It explains how the DRS affected by that, and it hasn't been, you know, why is the price action is the way that it is. So I'll link down below, or just go ahead, just search DRS GME right there, and then you'll find it right there in the first one. But again, is it another propaganda to try to kind of lock up that chunk of shares so that they could do the swap with it at some point? And because, you know, it's been so long and nobody really seems to pay attention to it, and on top of that, it takes the liquidity away from the stock market, so that you don't see the price action. And so again, as far as making the price movement to be popular in you know, in the public and so on, I think it's kind of, to me, it's what am I trying to explain? So to me, I think DRS give them the ability to prolong, you know, the inevitable a little bit longer, right? In my opinion, right? Because again, in my opinion, they use that chunk of shares in the DRS in order to do swap with it, you know, behind closed door, right? Counterparty risk or whatever, or hide the risk in some way, so that it appears as if the stock is not doing much to the retail investor out there, right? And so they could produce the narrative that, hey, this this company is dying, this company is not doing anything, don't pay attention to it, pay attention to Nvidia and all that stuff. It's much better than GameStop, right? And so yes, they could prolong it. It doesn't mean that they're gonna be able to get away from it. The problem is still persists because everybody keep buying shares. So it really depends on how much more onslaught of other company that they could distract you or retail investor with, or even the call option folks, right? The people that are trying to do a gamma ram or whatever, And I'm sure they're going to try to get away from it, right, as much as they can. And they haven't been. I feel like they have been getting away with it for 3 years already. So the next phase is the correct valuation of the company, right? So again, like I'm talking about it in the standpoint of the price action here. So regardless of what happened to the price, the company is doing well. And so that's the caveat there that people aren't really talking about too much, is because, again, to me, it's not the price actions so much. I think the fact that the company is doing well, that's what the threat is. And so I'm sure they're gonna throw everything at us, including the kitchen sink, so to speak, in order to kind of like deter people from investing in this company the right way, right? The long-term mindset, and the fact that we could hold this company forever, right? And like Moran said, until we see the company doing well beyond anybody could expect it to do, we might still see the price action the way that it is today, right? Hardly any volume, hardly anything, until it's glaring to the institution. And apparently institution has been buying into it. Like, it's not like something a secret here. We know BlackRock has been buying into it a couple of weeks ago, right? And so, sorry, I hope I make some sense there. But if you want to know about DRS and you haven't seen that particular interview, I highly encourage you to do that, because it explains a lot. And this guy that he brought on to interview, he's apparently like a professor on the stock market or like the financial system. He was teaching, the course on trading stock and all that stuff, but apparently he didn't even know what DRS is, this gentleman right here. So he said that on that one. So, or he never know about the DRS until the GameStop situation arises. So GameStop, what happened to GameStop really woke so many people up, right? Even including the people that have been in the financial sector for a long time. They still like, oh, what? This happened, right? And that's what happens. Like when stuff like this happen, people always say, oh, those are conspiracy theorists and all that stuff. Like, no, it's happening right in front of you. You just haven't been noticing it because the news doesn't tell you all this stuff. And so they continue to lie about it too. So we all know why the news does what it does. Sorry about that. That was a long-winded answer. Sorry. Okay, the analysis has been right so far. Okay. What analysis? For GameStop? You mean like the wet bush analysis? Seller boxing, and I hate this little thing. I can't move it. Can I move this? Seller boxing and heat lamp. Peruvian bull is crazy. Okay, Vanguard and BlackRock have to buy shares on every company for their index fund. Those are passive investment. Yeah, I mean, you could say it like that, of course. But they're buying shares, right? They're supposedly locking it up. So that means the increasing institutional ownership is even more and more, right? Technically, they could lend it out and have people shorting it some more. That's not my point. My point is that shares has been bought, right, by every entity, including retail, right? Retail has been buying this company for a reason. And so the fact that the shares has been traded at like a all-time low, right? The volume is non-existent and the positive sentiment is coming up to this stock. So to me, that is the opportunity right there, for price action at some point. Nearest future, I don't know. But again, like they could do this shenanigans right here, right? Close the earning, they rocket it up and then drain the volume back again, right? So now you could say that is because nobody pay attention to this stock. Okay, we could play that game. But I think people pay attention to this stock. So Manuel, are you saying that the reason why they buy it just because they buy it because of the index fund, or they just it's a passive way of doing things? And another thing too is like, how Nvidia as well, it's a passive investment as well. Why is the price appreciate so high, right? Who let those shares being traded back and forth in the market? But when institutional buying into GameStop, price appreciation never seen the light of day. You see what I mean? And so if you were to listen to George Gammon here, he's explaining the same thing to the largest, like the overvalued stocks out there, the Nvidia, the Apples of the world. And it's all passive investing as well. So what gives, right? So if passive investing doesn't cost the price for GameStop, what's the difference there, right? GameStop has no volume whatsoever, and the market cap is low, much lower than Nvidia out there, but you don't see the price appreciation. So to me, there's something fishy there, at the very least, right? An appearance of it. But if you look at the off exchange traded for this particular company, I've been tracking it as well. So I don't know. It's hard for me not to think about what's happening behind the scene when you don't see the price appreciation on this company. And then they would love to tell you that, oh, it's because nobody pay attention to this stock. Oh no, because nobody wants to buy this stock because it's a shitty company, right? all of that narrative is being in full force. So right here, so today on February 14, happy Valentine's Day by the way. So right there, see, off exchange, exempt. Creeping back up again, tens of thousands of shares, right there. Okay, what do you think about Bitcoin? It looks like it's going to all-time high. Okay, Nvidia is going up because of the AI bubble. God helps new Nvidia. I know, I appreciate that though, but yes, so let's talk about the bubble. Of course, like every bubble, just like, Bitcoin bubble, blockchain bubble, every bubble is being pumped. But I think the reason why it's being pumped is because the institution are buying into it. And the passive investing crowd as well. a forced buy-in, so to speak, just like you were mentioning about how Vanguard, the reason why Vanguard and BlackRock does buy those shares of GameStop is because of passive investing, right? But the same way, just like I said earlier, I'm repeating myself here. I know there is a bubble there. I get it. Yes, people are buying call options and all that stuff to try to, chase the price action. That's why you see all those stuff as well. Like, I'm sure if you look at the chain, like the option chain, it's probably like going crazy too. But I'm sure institutions are buying into Nvidia. I think George Gammon on this particular video mentioned that too. I think where did he mention that? Ponzi. He called the S&P 500 a Ponzi. Where did he mentioned it in this one? You have to watch the whole thing, but yeah, passive investing is the thing that kind of rocket up all of those large cap. The more value, the overvalue part comes from the over leveraging as well. So people are borrowing money, to put into those index fund, and of course all of the U.S. pension fund that has trillions of dollars are leveraging, meaning they're borrowing based on the asset, and so they buy it more, right? And it's pretty interesting if you watch this one. But let's talk about Bitcoin. Yes, so Bitcoin, I know people are saying, oh, it's all-time high. I don't know. I'm kind of not convinced yet because the halvening hasn't happened yet. Usually before the halvening, it comes down, like it's corrected itself because, as the price goes on, the miners is kind of like need some, money unless they're funding it through, investing, new investor coming into into the company. They would need to sell the Bitcoin in order to, to have to fund their company, fund the mining rig and all that stuff, right? They need the funding for that. So the Bitcoin is going to be sold before the halvening cycle. And that's why you see that dump usually, the halvening cycle. So if you look at the price action right here, I know that it keep going up right here. I sold around here, fully expecting that it was going to kind of crash over here because I had the bias towards that, but it seems like it's creeping back up again. So I'm missing out on about 15%. So don't take my advice for this or anything. So I'm showing you that because I just want to tell you that I have no clue where the price goes. But my thought is that this might be the resistance that, but it looks like it's peaking, that passing through that resistance already. So this is the next level that you want to look into. But as far as all-time high right now, I don't see it, right? Because if you look at the previous cycle, right here, it just doesn't permit it yet, in my opinion, right? So I'm fully, I'm out of crypto right now, especially Bitcoin and Ethereum. I still have other coins, but not Bitcoin and Ethereum. And I'm waiting for this price level right here still. So I might not be able to get it at this level, but I'm sure when the S&P 500 kind of crash, everything's going to come crashing down as well, including Bitcoin, yes. The same way with the this way right here. Remember COVID? The S&P 500 come crashing. So yeah, it kind of track what the S&P 500 is doing too. So that's what I'm waiting for. But again, I might be wrong. I might not be able to kind of predict this the correct way. So don't listen to me. But anyway, so that's my thoughts on Bitcoin. And of course, I look at the negative diversion as well. You know, from here to here, price keep going up. Right there. I don't even know if this is how I do it correctly, you know. So if you look at the RSI, it's trending downward instead of up, right? And so that's indicative of it's like a momentum loss at some point, right here. All right, so let's take a look at the ranking real quick. But before that, I was looking at this Ryan Cohen tweet right here. It's pretty cool. It said, I predict the next iPhone will be called iPhone 16. That's pretty cool. Every time he tweets, obviously, like, it's amusing to me because, like, he hardly does any tweets lately, right? I think 7 days ago he was tweeting, if China wants to stabilize their financial market, they should remove a capital control and allow their company to be freely repurchase shares. So maybe he's thinking about repurchasing shares of GameStop, right? We have $100 million kind of earmarked for that. So yeah, I mean, GameStop has so many ammunition. It's like that I think people don't realize how much, you know, opportunity that is in GameStop right now. And they're gonna miss out, you know. I'm so glad that I am able to kind of see this company as the way it is. So, but anyway, so let's look at the ranking real quick. So on Moran shows, obviously he was showing this ranking, which is totally makes sense to me, and I didn't even realize that this is what the ranking for GameStop is, right? If you just listen to the media, and including me, I mean, I'm investing in this company, right? I thought GameStop is at least like 100 something, right? Based on the specialty retail here. And so it's really refreshing to see that GameStop is actually at 17 ranking in America, right? And again, this is just a small category right there. It's called specialty retail right there. And so, you know, I remember this company right here because before Uncle Eric mentioning it to Moran's live stream, he mentioned it in my live stream of looking at this particular company, right? And I take a look at it, and you know, I gave my honest opinion based on what I see on the analysis right there. And I'm sure, you know, some of you were here too to kind of listen to that. And I didn't know the angle of the private equity. Of course, this is a private equity owned, right? No wonder, you know, you see a lot of like kind of concern there. But it's higher than GameStop, right? Currently, anyway. Ranking 15 and 16. Moran's mentioned this one, of course, another private equity as well. And then I saw Uncle Eric also mention this one as well. Maybe it was a different one, but I haven't taken a look at that yet. But it's kind of curious to me that these companies are owned by private equity. Okay, this is a strong buy. Obviously, the analysts out there want you to buy into it. But let me see what else. Pretty strong. I mean, like, look at the profit margin there. That's debt to equity very low. That's good sign. Book value $4 right there. close to $4. I mean, first glance, obviously, this is a pretty good company, right? But then you need to know what the leaderships are. What are they doing and who are they coming from, right? So that's one. So currently, this one ranking 14. Hold on, is it 14? Shoot. Oh man. Let's go back. Yeah, so this is 14. So we need to beat these people right there. These three. And I'm sure we would be able to. And then Bath and Body Work. That's a pretty good retail there. But none of them are electronics though. So I don't see any electronics. It's more like, so there's no, it's hard to compare, right? In that sense. This one auto, this is a cosmetic, tractor, Genius Parts, I don't know what those are. Oh, and then Best Buy. So this is the only electronic one that I see. Of course, compared to Best Buy, I'm sure we could beat them in 5 years. How about that? My speculation, obviously. So that one is a 17, right? But if you were to look at GameStop at a overall, overall market right there, it's ranking 164. So this one is a higher category, sorry. It's a larger category, and it's called consumer discretionary sector, and Amazon is number 1 right now, right? So that's what we want to beat, right? Amazon, hey, a girl could dream, right? But let me see, Lululemon, Ford company. But as far as like the consumer discretionary, we are ranking at the 164. Not too bad. I feel like, even that, like, to me, even the part that it kind of bothered me so much is that if you were to listen to the media, right, they always like make it sound so bad, like that GameStop deserved to be down here. Like, what is the lowest rank of all companies out there? wait, hold on. So 500 something, right? They make it sound so bad that, I thought it would be on the top 500 ranking company, right? On the bottom end. So it's refreshing to see that GameStop is actually much better than people are painted it to be. And so they're not going anywhere, obviously. Like, even with the old leadership coming in, the company actually ranked pretty high. Now, I know this is based on the market cap here. I guess like before the whole DFW thing, the company was really low, right? Was $250 million company. So the fact that it kind of moved up the rank like hundreds of times over, that is refreshing, right? And again, there's still much more room to run because of, just like Marantz, I agree with everything Marantz was saying about how leadership is everything. Yeah. Hi Jay, thank you. Happy V-Day. PNC mentioned a mid-year soft landing recession in their quarterly earnings report. PNC? Wait, isn't that the bank? Like, I don't trust the PNC bank. There's something wrong with it that I heard about. Again, I'm not well versed on all of the banks, but that name is familiar to me. Like, sounds familiar to me. PNC. I don't know. Like, how do you feel about that? I don't think there is a soft landing coming because of the leveraging, right? And isn't this the bank that was very over leveraged themselves? Let me look at their finance real quick. Financials. Okay. Okay, gross profits, net income. Okay. Look at the net cash. So they have $66 billion in total debt. And then their cash on hand, it's 46 billion. Book value 24. Oh wow, book value is pretty good-ish, right? They have more debt currently than shareholder equity. Okay, cash flow, operation, free cash flow. I mean, there's not immediate concern here, but why is the Z-score non-existent? That's concerning. If it's a financial, if it's a bank, it should be sure, no, that the Z-score should be at least coming out positive on that end. Okay, looks good so far. Not quite sure why it was so bad. I'm trying to look for a problem here, you guys. Sorry. So shareholder equity, of course, they have goodwill of $10 billion there. Net cash position in the negative. Obviously, eventually they're gonna need some cash, but not immediately, right? They do have pretty good cash there. Okay, so retaining earning is pretty good. At least they're making money. I don't know. I just don't trust the narrative of the soft landing at all, in my opinion. Look at the cash flow. So if you look at the cash flow right now, net cash flow is down $1.2 billion right there. Last quarter, and this is a trailing 12, by the way. So they're in the negative, like since what, 1, 2, 3, 4, 5, 6 quarter in a row already in the negative. Financing cash flow, of course, they just turned negative this recent quarter. Yikes, right? Coming from $12 billion in the plus to now $6 billion into the negative. So, don't know what's going on. You know, maybe it's that bond thing again. The fact that they locked themselves in the long-term bonds that pays 2%, and now you have a long-term bond that pays 4%. So of course the value of their bond is going to go down. And they don't have good risk management, right? Like people managing risk, supposedly having the degrees, why don't they do any risk management? People, it's greed, right? People are greedy here. That's why they just like, oh, we could extend another $1 billion. Anyway, just my thought here. I'm sure like the banking crisis is still looming, right? You've heard of like so many banks are going. What is it that New York City Bank, when kind of like berserk. What's in New York? Right here. New York Community Bank Corp. Is it still? Yeah, in the 4. Still looming. Look at this. Like earnings per share went down substantially. Crazy. You know. Look at this. Earnings per share went up. From up to now, down. And then down again. That's ridiculous, right? And so this is based on 2 loans. And remember, this bank bought some loan from Signature Bank, right? I bet you anything it has something to do with the Archegos situation. So I don't know. Hey, speculation, right? I don't know what's in those loans, but maybe a swap against GameStop. Who knows? Who knows? Alright, hi everybody. So, yeah, I think, the ranking of GameStop is promising to me. I feel like we're gonna beat all these companies, you guys. Like, honestly, like all the... we went from $200 million worth of the company, right, to now $4 billion. So that means something, right? And on top of that, now we have a good clean balance sheets to go off of. So nothing to concern there, but just like Morantz was saying, we want to beat this company. So what is this? Oh wow, $900 million. Can we achieve that? Maybe. Okay, so wow. So the market cap is this, but they sell $14 billion right there. Wow. Okay. Trailing 12. But their price is $200. Why is the revenue so high? Okay, so this is a trailing 12. Let's take a look at this company real quick. Okay, so expenses, income, other expenses, income. This is interest expenses. So they do have some debt there. Profit margin. Okay, so they have gross profit margin of close to 20 and then 6%. What do they sell? That's probably another. Together subsidiary. Automotive. Okay, automotive. Retailer. Used vehicle, new vehicle. Okay. So I bet you anything the revenue going up is due to that price appreciation for the used vehicle, right? Within these couple of years, because of the pandemic, I don't know, printing of money, right? You see that the used car value goes up in price. So since this company is selling used car, they're beating on earnings, right? But used car has been kind of coming down in price. So the growth, if you look at the growth of revenue right now, it's kind of going back the other way. So, do they do any financing of the car? That might be another concern too. The company also provides financing, insurance. Yep, So I think this is going to be coming down on the other end of it, because people are not, they can't even afford a car right now. And so delinquency goes up in price. So yeah, I bet you anything we're going to be able to beat this company pretty fast. Hold on. Look at this. Net cash, negative $3 billion. They only have $49 million left, right? And then they have $3.5 billion in debt. So that's the concern there. But they're not in immediate bankruptcy right here because the score is higher than 3. That's good. At least it's not an immediate concern. The only concern is that they're in the used car sector. Capital expenditure is lower than the cash flow. That's pretty good. I like that. Yeah. Okay. So to me, the only concern is the fact that they're in the used car market. They're doing financing, right? Insurance and all that stuff. Insurance might help them with the finance, or might help offset the finance, because you could hike up the insurance, and they might not be able to kind of get away with paying that. But as far as like the car payment, people could just like, hey, F it, I'm not gonna own a car anymore, right? If you can't pay for the car payment, like and I think we're coming to that. It's like the average car payment for an average American now is like $500 or something like that, something ridiculous, right? And so that's another concern too. And then of course credit card went up like crazy. That's another thing that is loan in general. So my thought is that we could beat this company pretty easy. So what does the analyst want us to do here? Let me see. What's the forecast? Oh, high of 245, low of 165. Okay. Who are these people? JP Morgan wants you to hold and or buy. Or buy, upgrading it. Somebody downgrading it. Highly suspicious, right? Of course, I bet you anything they probably were the financier of this particular company for the car. It's a kind of a self conflict, personal. What is it? What's the term? Conflict of interest. There you go. Morgan Stanley tell you to sell. So you see, like with these type of company, they have at least 2 or 3 analysts out there that is willing to give, at least, if you want people to sell GameStop or whatever, or buy. Like there has to be a mixed review here for every other company out there. But for some reason, GameStop is the only one. And so that's the discrepancy that I'm always seeing in my purview here. But if you look at, hold on, that gives me an idea of what I wanted to do here, because I'm kind of curious myself. If I were to look at the sector again, and consumer discretionary, right? Let's look at the lowest rank of the company down here. And let's see how many analysts cover this particular stock. So this is a small cap company, you would agree. The revenue is like 2.9 million shares, as $2.9 million, sorry. Very small company, right? Very small. And so, look at this. Price target, 1,000. What the heck? Who is doing this? Okay, let's do the forecast. Okay, one analyst is giving you an average cost of $1,000 right there. So it's a strong buy, you guys. It's a strong buy. So who is this? I don't even know who this AE guess. A strong buy. Okay. So 1. Why is it such a strong buy? Negative. What the hell? Cash flow. Terrible company, right? Terrible company. Okay. So that doesn't prove my point there. Okay. Let's look at the 1-up here. How many analysts is covering this? No analysts covering this. Okay. So maybe I'm going too far. Let's try number 500. Right? It's smaller than Gamestop here. Let's see how many analysts. No, there's no analysts out there. Okay. Let's look at 400. Sorry, you guys, I'm trying to see how many companies out there. Okay, so these are small enough that the analyst doesn't even care about. Okay, this one has a forecast. This is 400th on the rank 7, right? So my point is that, like, the reason why I try to look for this is kind of confirming. And again, like, I'm searching for a confirmation bias here. So this is the number 400, right? Rank. And there are 7 analysts covering this company, right? I would argue that GameStop is much more popular and at a higher rank than the 400 in this list. So where is the analyst out there that is covering, like, a variety of analysts that's willing to kind of like, hey, evaluate the company. Why not, right? That's my suspicious there, and that's why I think something is afoot here, you know? And so call that a conspiracy theory? Call it that. But why? Like, explain to me why there's no analyst is willing to give this company any heads up. I mean, look, this company is losing money, right? You could argue, oh, because they're losing money left and right. Oh, because it's a shitty company. Well, look at this company. Even shittier than GameStop, no? I apologize if you're in this company. But what I'm trying to say is that at least they're not making money. Look at the profit margin. It's a lot, like, the loss is a lot steeper than GameStop. But yet there's 7 analysts out there that is covering this company. Equipment and lifestyle products, outdoor and consumption. So this is like retailer. So their revenue is a lot lower, 300 million. But yeah, so my point is that, hey, there are companies out there that are at a lower rank than GameStop that has a lot of analysts taking a look at it, right? Here, number 400, right? While GameStop is way up here. At the very least, one more analyst should take a look at this, right? A reputable one. How about take a look at the lower rank right here. This is one lower than GameStop. How many analysts? 9, right? See? So my point is that I think they're sending a memo out saying, hey, don't cover GameStop. No, don't cover GameStop. They don't give you forward guidance, but for some reason, no forward guidance, therefore no covering GameStop. That's BS, right? You could still cover it. As an analyst, you care about the data, right? You care about the raw data that is presented to you. You don't need the leadership to tell you, hey, I'm going here, in order for you to kind of project the trajectory of the company, right? Because any real scientist, data scientist or whatever, they all they need is just to look at the forensic of what the data present to them in the past, and then they could deduce, it's like, go with the number, and then there you go. You could see the trend, you could see the trajectory based on the balance sheet itself, right? It's like, oh, what are they trying to achieve by increasing inventory? What are they trying to achieve by paying off debt, right? So if you can't, to me, you could see the intent by the action that the leadership is doing, like the action that they did in the past, right? And so as an analyst, you don't need a forward guidance. You don't need Ryan Cohen to be like, hey, tomorrow I'm going to do this. Hey, in a year I'm going to do this, for you to, make any, at least analysis, a fair analysis one. Like, I'm not looking for a hype or anything, right? Don't tell me to buy into this company because, I don't know, memes, right? Because it's a great memes out there. It's like, what? No. Anyway, that's my rant there. Oh, this is Yeti. Yeti is down here. Yeti Holding. So with this one, how many analysts? Yeti have 19 analysts. Look at this. A high of $600 a share, you guys. Come on. So yeah, there's tons here. A self-interest conflict of interest. There you go. Thank you. Thank you, Anthony. Yeah, I couldn't find that word, but yeah. So yeah, even the downgrades one, right? At least you have people talking about this stock. So to show some engagement of some sort, right? Now I'm curious about, okay, what is this thing here? Okay, so this is GameStop. If I come down here, no. Oh, wait, actually, forecast, there's it. Okay. So, what is this? Revenue growth. Okay, so 2021. Revenue growth. Alright, so it seems like 2022 went down, 23 went down, 24 went down. It seems to creep back up again. So the next 25 will be better. So we might have to wait until 2025 for this company to be evaluated correctly, it seems. So 2025. Right there. So it seems like they're projecting right here EPS growth 29% this fiscal year 2024, right? And this is again financial forecast. If you do quarter, they're projecting that we're gonna be positive 2026. that's gonna be blown out of the water. This quarter right here, you know. That is so weird that they don't even... Oh, because it's negative. We haven't making money, that's why. Huh. So it seems like this year right here, this is what they are estimating, right? Negative 9 cents. Is this the estimation for the quarter? Annual is 11 cents right there. So this quarter is the one that they're imagining that we're losing 9 cents. But for some reason, TradingView shows this one. So am I wrong on that front? Number of analysts, 4. Where are the 4? Makes no... They don't show you any other analysts except Wetbush right here. So that's interesting. That's interesting, you guys. High, average, low. So this fiscal year, they're averaging out 11 cents per share. Next fiscal year, they're averaging out 14 cents per share. So this is how you read it. The highest that they're expecting us to make money is 20 cents per share. The low is 4. And so even this projection right here, you see how they projected higher, right? Higher and higher. That means we're doing well, right? And so with just presenting this data alone, you would know that the company is doing well, right? Because they're estimating higher and higher EPA. So any analyst out there that doesn't know how to project this company, again, like I'm being condescending here. Of course, there are people who wants to cover this, I bet, but they're not allowed to, right? By who? Who doesn't give them the ability to, you know, investigate this this company? And that speaks to what I agree with Morans too, is that hey, there are a group of people out there who control the narrative on the media side, and they tell people, you know, that they know. It's like, hey, if you're into GameStop, if you cover GameStop, you're not gonna have a job here. So that's why they don't do it, you know. Again, me speculating. Hi Lynn, sorry I haven't been seeing you around. I appreciate you joining in. Yep, so I don't have much there. Of course, like I was just going to show you guys, you know, to go watch this video right here. It's really good. And watch this video right here if you want to know anything about DRS. And then watch... No, not that one. No, I don't have anything else. I think I'm on to the end of things here. I'm sure I'm preaching to the choir here, everybody. Let's see. Anything else? I know Sean's here. Okay, Anthony. Alright. I guess that's all I have, you guys. I don't know how long I've been here babbling around, but let's see, tomorrow, I don't know, we'll see with the price action. Don't know where it's gonna go. It could go either way, right? If the SPY dumping, I'm sure, you know, GameStop's gonna take a dump as well. But so I just recently started my new portfolio. I mean, starting up again, kind of buying up into my Roth IRA. I'm still waiting for the half of the, because when you transfer the money, you could only use half of it, and I'm waiting for the other half to clear, and then I would have more to kind of like scoop up. But as far as like if it goes down to whatever, like $12, oof, I'm gonna kind of have a field day on that too. So and then I'll mark when I take a position on it. So this is the day that I took the position in. I think I bought at around 1460 or something. 1460 that day. And then the next day I'm gonna mark more. So yeah, I'm just curious about this company, and I'm kind of documenting my journeys, right? And so the purple line is when I started my position. So just full transparency there. So there's no secret that I was buying at a high price right here. Where's the price? Why is it not showing? That's so weird. Price bar. There we go. So this is when I first started my position on Gamestop right there. Around, wow, close to 3 years ago or 2 years ago. Man, that was a long time. 2021 of November right there. Okay, alright, that's all I have, you guys. Thank you, Lionel. Appreciate you. Appreciate you, Lynn. Appreciate you, Anthony, Jay, Manuel, and Sean.